crude oil just smashed through $100 a barrel. Again. And this time it's not some random blip. This is a geopolitical event with real teeth. Iran's ceasefire is on life support. Markets are panicking. And worst of all, today, right now, we're getting April's CPI inflation data. The Fed's been telling us inflation is cooling, that interest rates will come down soon, that everything's under control, but $100 oil doesn't care about the Fed's narrative. Welcome back to TechMeHome MarketPhase Daily News. I'm your host, and if you've been watching this channel, you know we don't sugarcoat what's happening in the markets. Today is one of those days where everything converges, and it's not pretty. Let's start with the elephant in the room, oil at $100. That matters because energy is embedded in literally everything. Your groceries, your gas, your electricity bill, your shipping costs. When oil spikes, companies have two choices: eat the cost and watch margins evaporate, or pass it to you. Guess which one they pick. The Iran ceasefire collapsing is the match that lit this fire. But here's the thing, geopolitical risk is now the baseline. It's not a temporary shock, it's structural. That changes the calculus for the Fed. Now imagine you're the Federal Reserve, right? You've been running the money printer for 3 years. You flooded the economy with stimulus. Inflation hit 9%. The public was furious. So you started raising interest rates aggressively, 4% in a single year, fastest tightening since the 1980s. And the Fed's pitch was, don't worry, inflation is transitory. We got this under control. But inflation didn't cooperate. It stuck around, so the Fed pivoted. Okay, they said, maybe rates are higher for longer. But then the banking sector started cracking, and they panicked and cut rates anyway. It's like watching someone try to land a plane in a hurricane. Very confident, very in control. Speaking of control, you can't control what the Fed does, but you can control how you protect yourself. That's why platforms like let you diversify across assets the Fed can't print, commodities, precious metals, international stocks. When fiat currency gets weird, and trust me, it gets weird, you want optionality. Set up an account in 2 minutes. Link your existing brokerage. Sleep better knowing you're not 100% exposed to Fed policy errors. So here we are. It's Tuesday, May 12th. April CPI data drops today. Markets are already spooked. Energy prices are up. Growth stocks are getting crushed. The Nasdaq is down. Tech is bleeding. And Kevin Warsh, Trump's pick for the Federal Reserve Board, just advanced to a Senate vote. Warsh is hawkish. He's skeptical of rate cuts. If he gets confirmed, that's another voice in the room pushing the Fed to stay tight. Meanwhile, the Bank of England is flagging risks from AI financial systems. Translation: regulators are freaking out about the infrastructure that powers modern finance. That's another layer of uncertainty for mega-cap tech stocks that have already been priced for perfection. Tech is getting hit from 3 angles. 1. Rate expectations are rising because inflation is sticky. 2. Geopolitical risk and oil price spikes create a stagflationary scenario. That's when growth slows, but inflation stays high. Terrible for growth stocks. 3. Regulatory scrutiny on AI financial risks is increasing, which directly targets the narrative that's been carrying mega-cap tech valuations. The narrative was, AI is the future, and these companies own the AI narrative, so they're worth infinity. That narrative is cracking. Here's the ELI5. Imagine you're sitting at a monopoly board. The Fed's been printing monopoly money for 3 years. Suddenly there are way more coloured bills in circulation. Everything costs more in monopoly dollars. That's inflation. So the Fed stops printing and starts pulling money out of the game. Interest rates go up. But then, oil prices spike because of geopolitical chaos, and that's like randomly landing on go to jail 10 times in a row. The game gets chaotic. You can't predict what's going to happen next. That's where we are now. GameStop just got nuked because eBay rejected its $56 billion takeover bid. That was supposed to be the grand narrative. Activist investor saves brick-and-mortar retail. But it failed. Hims & Hers cratered on a quarterly loss and revenue miss. Telehealth was supposed to be the future. Turns out when rates rise and growth stocks get repriced, even the hot sectors aren't immune. The big picture? Markets are re-rating. Risk assets are selling off. Safe havens are getting bid. Precious metals are mixed. Crypto is mixed. Because nobody knows if CPI today will be sticky or soft. If it's sticky, if inflation didn't cool as much as the Fed hoped, then rate cuts are off the table. Maybe rates stay higher for longer. Maybe they go up again. And if you're holding growth stocks, tech stocks, or any asset priced on the assumption of lower rates, you're going to have a bad time. The Fed created this mess. They printed too much money. They kept rates too low for too long. And now they're trying to thread a needle that probably doesn't exist. They want to kill inflation without killing growth. They want to keep employment high while rates are restrictive. It's not happening. Something has to give. And today's CPI number might be the catalyst that finally breaks the illusion. So what do? First, don't panic. But also don't ignore this. Today's inflation print matters because it determines the Fed's playbook for the next 6 months. If it's hot, expect volatility and more downside for growth. If it's cool, expect a relief rally in tech. Either way, the long-term trend is clear. The era of cheap money is over, the era of financial repression is beginning, and geopolitical risk is now a permanent part of the equation. That's the state of markets as of May 12, 2026. We're live streaming a policy error in real time. Buckle up. None of this is financial advice. This is purely for entertainment. Always do your own research. Talk to a financial advisor. Manage your risk. And if you want daily market breakdowns, hit subscribe and turn on notifications. We drop new content every morning before market open. Thanks for watching TechMeHome MarketPhase Daily News. I'll see you tomorrow.